Bitcoin is a decentralized digital currency created in 2009 by an anonymous entity known as Satoshi Nakamoto. Unlike traditional currencies, Bitcoin operates on a peer-to-peer network without a central authority, using blockchain technology to ensure transparency and security. Transactions are verified by network nodes through cryptography and recorded on a public ledger called the blockchain. Bitcoin is limited to 21 million coins, making it a scarce asset. It can be used for online purchases, investments, and as a hedge against inflation. Bitcoin mining, the process of validating transactions and securing the network, requires significant computational power. Over time, Bitcoin has gained mainstream adoption, with institutions and individuals using it as a store of value. However, it remains highly volatile, facing regulatory challenges and concerns over its environmental impact. Despite this, Bitcoin continues to shape the future of finance. Bitcoin was born out of the 2008 global financial crisis as a response to the flaws in traditional banking system. On October 31, 2008, an anonymous person or group under the pseudonym Satoshi Nakamoto published the Bitcoin white paper titled Bitcoin, a peer-to-peer electronic cash system. This document outlined a decentralized digital currency that would eliminate the need for banks and allow direct transactions between users. Bitcoin officially launched on January 3, 2009, when Nakamoto mined the Genesis block, Block 0. This first block contained a hidden message. The Times 03 Jan 2009, Chancellor on brink of second bailout for banks. This reference to a newspaper headline hinted at Bitcoin's mission to create a financial system beyond government control. Soon after, Nakamoto released Bitcoin's open source software, allowing others to participate. On January 12, 2009, the first Bitcoin transaction took place between Nakamoto and cryptographer Hal Finney. Bitcoin's early days were experimental with limited real-world use. However, on May 22, 2010, programmer Laszlo Hanyecz made history by buying 2 pizzas for 10,000 BTC, marking the first commercial Bitcoin transaction. Though Nakamoto disappeared from public view in 2011, Bitcoin continued to grow, becoming the foundation of a revolutionary financial movement that challenges traditional monetary systems. Bitcoin operates as a decentralized digital currency that enables peer-to-peer transactions without the need for banks or intermediaries. It is powered by blockchain technology, a distributed ledger that records all transactions securely and transparently. How transactions work: when a user sends Bitcoin, the transaction is broadcast to a global network of computers, nodes. These nodes verify the transaction's validity by checking if the sender has sufficient balance and using cryptographic signatures for security. Bitcoin mining and blockchain. Transactions are grouped into blocks, which are added to the blockchain through a process called mining. Miners use powerful computers to solve complex mathematical puzzles, proof of work, to validate transactions. The first miner to solve the puzzle gets to add the block to the blockchain and is rewarded with newly minted Bitcoin. This reward started at 50 BTC in 2009 and halves every 4 years, called halving, making Bitcoin scarce over time. Security and decentralization. Bitcoin security comes from its decentralized nature. No single entity controls the network. Every transaction is irreversible, preventing fraud or double spending. The blockchain is maintained by thousands of nodes, making it resistant to hacking or government interference. Supply limit and use cases. Bitcoin has a fixed supply of 21 million coins, ensuring scarcity. It is used for payments, as a store of value, digital gold, and for investment. While Bitcoin faces challenges like price volatility and regulatory scrutiny, it continues to grow in adoption, shaping the future of decentralized finance. Bitcoin's evolution and adoption. Since its launch in 2009, Bitcoin has evolved from an experimental digital currency to a globally recognized financial asset. Initially, it was primarily used by tech enthusiasts and cryptographers. However, as awareness grew, Bitcoin started gaining broader adoption. Early growth, 2009 to 2013. In 2010, the first real-world Bitcoin transaction occurred when Laszlo Hanyecz bought 2 pizzas for 10,000 BTC. By 2011, Bitcoin began attracting media attention, leading to increased adoption. The rise of crypto exchanges like Mt. Gox made it easier to trade Bitcoin, increasing its value and liquidity. Mainstream attention and challenges. 2013 to 2017, Bitcoin's price surged to $1,000 in late 2013, drawing both investors and regulators' attention. 2017 was a turning point. Bitcoin hit $20,000, fueled by retail interest. This period also saw the emergence of institutional interest as companies and hedge funds started exploring Bitcoin. Institutional adoption and legal recognition, 2018 present. Companies like Tesla, MicroStrategy, and PayPal integrated Bitcoin into their financial models. In 2021, El Salvador became the first country to adopt Bitcoin as legal tender. The growth of Bitcoin ETFs and increasing adoption by banks indicate a shift toward mainstream acceptance. Future prospects. Bitcoin is now viewed as digital gold, a hedge against inflation and economic instability. Despite challenges like regulatory scrutiny and price volatility, adoption continues to rise, shaping the future of decentralized finance. Bitcoin's impact on the financial system. Bitcoin has disrupted the traditional financial system by introducing a decentralized, borderless, and censorship-resistant form of money. Unlike fiat currencies controlled by central banks, Bitcoin operates on a peer-to-peer network, eliminating intermediaries and reducing reliance on banks. Financial inclusion. Bitcoin provides financial access to millions of unbanked individuals, particularly in developing countries where banking infrastructure is limited. With just a smartphone and internet connection, people can send, receive, and store Bitcoin without needing a traditional bank account. Challenging central banks, Bitcoin's fixed supply of 21 million coins contrasts with fiat money, which can be printed endlessly, leading to inflation. Many see Bitcoin as a hedge against inflation and currency devaluation, making it attractive in countries with economic instability. Cross-border transactions and remittances. Bitcoin enables faster and cheaper international transactions compared to traditional banking systems. Migrant workers use Bitcoin to send remittances without high fees from intermediaries like Western Union. Institutional adoption and regulation. Large corporations, banks, and investment firms have started integrating Bitcoin into their financial portfolios. Countries like El Salvador have made Bitcoin legal tender, challenging the global dominance of the US dollar. Governments are now regulating Bitcoin, recognizing its potential while addressing concerns like taxation, fraud, and money laundering. Conclusion: Bitcoin continues to reshape global finance by offering an alternative monetary system that is transparent, decentralized, and resistant to manipulation. While it faces volatility and regulatory hurdles, its long-term impact on the financial system is undeniable. Criticisms and challenges of Bitcoin. Bitcoin, despite its innovation, faces several criticisms and challenges. 1. Volatility. Bitcoin's price is highly unpredictable, making it unsuitable for everyday transactions. 2. Regulatory uncertainty. Governments worldwide struggle to regulate Bitcoin, leading to bans or strict controls in some countries. 3. Scalability issues. The Bitcoin network can handle only about 7 transactions per second, causing delays and high fees during peak time. 4. Energy consumption. Bitcoin mining consumes vast amounts of electricity, raising concerns about its environmental impact. 5. Security risks. While Bitcoin itself is secure, exchanges and wallets are vulnerable to hacks and scams. 6. Illicit activities. Bitcoin has been used in money laundering and illegal transactions, drawing criticism from regulators. 7. Adoption barrier. Many businesses and individuals still find Bitcoin complex and difficult to use. Despite these challenges, ongoing developments aim to improve Bitcoin's efficiency, security, and regulatory compliance. The future of Bitcoin. Bitcoin's future remains a topic of intense debate, but its influence on global finance is undeniable. As adoption grows, several key trends could shape its trajectory. Institutional and mainstream adoption. Large corporations, hedge funds, and even governments are increasingly integrating Bitcoin into their financial system. The approval of Bitcoin ETFs and the rise of institutional investments signal its growing legitimacy as a store of value. More countries may follow El Salvador's lead in adopting Bitcoin as legal tender or incorporating it into national reserves. Scalability and technology improvement. To address Bitcoin's scalability issues, solutions like the Lightning Network are being developed to enable faster and cheaper transactions. Further advancements in Layer 2 protocols could enhance Bitcoin's usability for daily transactions. Regulatory developments. Governments worldwide are working on clearer regulations, which could either boost adoption or impose restrictions. Striking a balance between regulation and decentralization will be crucial for Bitcoin's long-term success. Economic and environmental factors. Bitcoin's role as a hedge against inflation will likely increase in times of economic uncertainty. However, concerns over its energy consumption could push the industry toward more sustainable mining practices. While Bitcoin faces challenges, its future remains promising as a decentralized digital store of value, reshaping the global financial landscape. Summary: Bitcoin is the world's first decentralized digital currency, operating on a peer-to-peer network without the need for intermediaries like banks. Powered by blockchain technology, it enables fast, secure, and transparent transactions globally. With a limited supply of 21 million coins, Bitcoin is often referred to as digital gold, serving as both a store of value and a medium of exchange. Despite market volatility, Bitcoin has gained mainstream adoption, with businesses and institutions recognizing its potential as an alternative asset and payment system. Call to action: don't miss out on the future of finance. Whether you're an investor, trader, or simply curious, now is the time to explore Bitcoin. Educate yourself, secure your assets, and be part of the financial revolution. Start by researching, using a secure wallet, and considering a small investment today.